Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets brought to you by the FTX app. Links available in the description below for all your mobile trading and portfolio tracking needs and desires. Support them because they are long-time supporters of the show as well. And let's get straight into it. So we've had new quarterlies and new monthlies. Not a ton of expansion on the monthly time frame. That's not terribly surprising. I mean, at face value, you could make the case for a kind of subtle breakdown in Bitcoin dollar. You can see this big dump candle had its lowest close here. That's around the 20k handle. That's where the market was supported. And then if you look at where the most recent monthly close came in, it was below that cluster. So while this isn't the most kind of impulsive, obvious breakdown type of candle, and it could easily turn into a deviation, at face value, the market made a new lower monthly close and also closed kind of below 20k, or at least very much below this recent range. So if we want to get our monthly levels, we could simply do this and delineate kind of that 20k cluster underside on the monthly. And then we could also just take the top side of the range for the monthly range high, and we could even be slightly sneaky and see where the midpoint of that lands, which is at around 21,646. So I will annotate that very quickly. 21, okay, monthly mid. 21,646 is our monthly midpoint, and voila, there's our admittedly tight monthly time frame range, which is worth observing on other time frames as well. And here's sort of what we're left with. Now again, it is tight, and that is because the price action around this entire consolidation has been tight, but it is also very useful kind of at face value, and it does overlap with a lot of the other levels we spoke about. So for example, last week we paid attention to this lowest close here at sort of 19.2 all the way up to 19.5. That hasn't been reclaimed yet, and the monthly level is slightly higher than that, but at least in terms of candle closes, we're still very much in the same area. So I think if you want to be bullish Bitcoin, I'm going to speak as a trader. I will detour very quickly to say, maybe this is a separate video, but from an investment point of view, or DCA, spot holder, whatever point of view, I think 20k is a good price. Is it necessarily the best price? No. Does it matter if it's the best price or not? Absolutely not. Like if you bought Bitcoin in 2018 at 6k and it broke down to 3k, you probably felt like a complete idiot for buying at 6 and now it's at 3. However, you probably felt quite smart if you held and saw it go to 69k, right? I think a similar analog can be extended to kind of 20k, where, it's a coin toss whether it's a generational bottom or not and where the market really ends up. But I think over a long enough time horizon, if you're right about crypto or if you care about crypto, you're probably not going to regret buying 20k. It simply depends on your volatility and drawdown tolerance in the interim. Now, I'm going to speak as a trader, so I'm going to talk about setups and all that type of stuff, but I think it's worth bearing in mind that macro bigger picture, that cyclically speaking or long-term multi-cycle crypto speaking, these aren't terrible prices by any means. And also in terms of macro context, realistically, I know at the moment it sucks and Fed is raising rates and inflation is high and strong dollar and this, that and the other, but if we zoom out, in our investing careers and trading lifetimes, if we're frank about it, how many tightening cycles are we likely to get? Like, how many times will these incredibly unique conditions repeat themselves, where we get complete shutdown and new economics from COVID, super inflationary, crazy fiscal and monetary policy post-COVID, and then the crazy inflation and tight correction that followed after? I mean, that sequence of events is on its own just so unfathomable that realistically speaking, we may only get one in our lifetimes. Or even if we take the credit cycle and liquidity cycles in general, we're talking about a very small handful of these types of corrections taking place in our lifetime, right? The crypto corrections, yes, may and will happen more often, but in terms of this whole big macro liquidity basket correlated trade, I think the number of times we'll get to experience this in our lifetimes is very, very low. And therefore, it also presents an opportunity, especially if you can stomach some drawdown and if you're around to invest and to survive and do all that type of stuff. So I think bigger picture, this is a very good time to just be alive, be in markets and have capital. Just as traders, we're trying to be a bit more granular about where we deploy that risk. But I think that bigger picture perspective is very useful. Anyway, let's look at the market. Not much has changed. We have a bit of a push early this week and, new monthly, new quarterly, etc. I think my requirements for Bitcoin are fairly straightforward. I do want to see some evidence of a failed breakdown or a range reclaim. I think I've been fairly consistent on that point, and I haven't been getting it. Now, that's really it. I think on the bare minimum, and I think this is almost silly to say out loud, I want the previous cycle's all-time high of 19.9 to 20k to stop acting as resistance and act as support. And I think that would create a day trading bias towards the range midpoint at 21k, and then maybe as high as, I know that sounds depressing, but maybe as high as 23 to 24k if that's the range high, right? At face value, the market's kind of been stair-stepping down this range. It's currently on the underside. Is this a deviation or not? Well, you have to let the market prove it to you. What does that proof look like? At the very least, a weekly close back inside the range, then we can make an argument of acceptance back inside those structures, and therefore you target the midpoint and potentially the range high. That's not available at the moment. Currently the market's just been kind of closing lower and finding resistance at the range low, but I think a weekly close above the prior all-time high is not asking for a lot. So I should hope the market could at least provide us with that much, and you can kind of just even see on intraday timeframes or even the daily, and especially visible on lower timeframes, that recently in this range 20k has been acting as really good resistance, and that sucks. You don't want the prior cycle's high, which has historically been good support, to be acting as resistance. So flip of that, I mean, there's still clearly value buyers soaking up Bitcoin at 18, 19k, especially with the relative strength in the last couple of weeks. But in terms of kind of inter-week flows from week to week, we need to flip 20k at the very least, and then we can have a conversation about the other structures within this range. That's where the congestion's been. If you want strength, show it to me and prove it by flipping the prior all-time high, and more importantly, trading back within the range low so that I can reasonably target the midpoint and perhaps the range high. That's really it for BTC USD. You can see that the particular range, or the most recent range we're in, has been kind of agonizing, really. Certainly from the last couple of streams, the market's basically been playing ping pong between 18 and 18.5 and 20k, and it hasn't moved. So the first significant shift of that would come if 20k stops acting as resistance. You can see it's been just, that's where all these rallies have been getting swatted down. A weekly time frame reclaim here, and I think there's plenty of space to fill in at least this leg of selling if the reclaim is genuine. So that's kind of what's on my radar. I know we had some S&P focus last week, which I will revisit, but I just thought it'd be nice to redraw or recarve this weekly Bitcoin range and kind of set some expectations for what would be the appropriate catalyst for an early week or early month rotation. I will say that, I'm not a fan of when the market really starts to print and rally early on in the week, like the new monthly, or in the early on in the month, or the first day of the week as it is today on the Monday. Generally speaking, you tend to get a few opportunities that revert later on in the week. But yeah, that's just some kind of color commentary. Long story short, the market still looks breakdowny. What it's got going for it is the relative strength, given equities have been nuking, but that relative strength has to convert into something for the chart to look bullish. I think the bare minimum, and we're being very charitable here, that we can set is stop using 20k as resistance, and then we can have a conversation about range midpoint and range high. Now, I know that's very boring, and it sounds almost insane talking about a rotation from 20k to 21.5, 22k, but that's just the market we're in. We have to tailor our expectations with the type of volatility that we're presented with, and within these conditions where swing trading has been a death sentence, virtually speaking, you just have to take what's given to you and trade it level to level, and then if it expands, great, you can kind of readjust your rules of engagement, but for the time being, it's very much kind of buy support, sell resistance, and wait for clear signals, and I think that's enough for me blabbering on about BTC USD. Hopefully, at the very least, the levels are good. As far as ETH goes, I think the daily time frame, I'm not terribly interested in the quarterly and the monthly, to be entirely honest with you. Even the weekly, to some extent, I think Don has some creative levels based around 1300, based on, anchored to this type of consolidation, bit of price action here. I think similar to Bitcoin, if you want the 20-second version, you want the previous all-time high to stop acting as resistance. Similar to Bitcoin, that's where a lot of the slowdown has come, and unfortunately, at least for the time being, you've got a really clean support resistance flip at the prior cycle's all-time highs. You've got support, 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 breakdown, and at the moment it's resistance. So if you want a single trade idea for ETH USD, it would be reclaim, or at least on the daily time frame, maybe a higher time frame, the 1400 cluster here, and then you could reasonably target the pre-breakdown 1600, and then maybe something closer to 17, 18, whatever it may be. But for both Bitcoin and ETH, as silly as it sounds, those prior cycle wicks are still acting as resistance. If you want a brain dead, easy to follow trade idea, wait for a weekly or daily sort of suggestion from the market that those levels are no longer resistance but are now support, and that in itself can be a decent trade idea depending on how they develop, and obviously we'll be there to update you should that be the case. In the interim, we're playing ping pong, and ping pong is between that kind of 13 to 1400 previous cycles level and kind of the mini consolidation here as your resistance. And in terms of support, I think this main bounce is originating from the 1200 former range high. So short term, between 1200 and 1400 is what you're dealing with. If you want expansion to the upside, you need this prior all-time high flip, and then we can look higher. Take it as a range until proven otherwise, and then if the range breaks, you kind of know how to do business, right? Or if the range fails to break, that can also be a signal. So 1200 to 1400 at face value for the time being. If the breakout sticks, you know where to target, at least fill in this void here, and you've got sort of 1600, 1700, I'd be conservative with it. At that point, we're dealing with kind of this price action cluster, if you recall, which is kind of a bit beaten up, but still worth paying attention to. And then if the market obviously breaks down, then, I mean, that starts to look rough, because we're dealing back within this 1200 to 1k consolidation, and you have to take it one level at a time, probably starting with 1.1. I don't want to project too far into the future. I think the takeaway message is the clearest signal will probably be a high time frame reclaim of 1400. In the absence of that, or for the time being, 12 to 1400 is your range and consolidation. Okay. As far as macro goes, and that's where a lot of our color came from last week, and I still think it's relevant this week, the monthly time frame. So if you recall, last week my argument was basically, if you want to risk on crypto, you want to see this kind of double bottom here, find support, reclaim the monthly cluster, and then as S&P goes up, crypto could go up. We didn't get that. Equities actually broke down and indices closed below monthly support. So I think at face value, now yes, could this be a deviation or a reclaim? Absolutely. Every single breakdown should be treated with suspicion to some extent, especially if it's counter trend. It isn't in this case, but you should have an open mind when the market's breaking down that, hey, is this a trap? I think at the moment at face value, until it proves that it's a trap, you have to treat it as a breakdown, right? Monthly cluster, support, close below, that's resistance now. So any rallies into the 3800 area, I think are rallies into resistance, especially if they happen kind of very aggressively early month, one-sided type of move. I'm not sure whether there's any useful additional color to be had from the weekly time frame or anything. If you wanted to be more generous in kind of delineating this area, you could just take this cluster of price action here, which gives you up to 3830s as kind of underside resistance. And I think that has you covered pretty well. So the earliest I could get a weekly or high time frame bullish bias on the S&P 500 would be a weekly close back above 3750 or 3800. Now again, that in itself, I said it's the earliest signal, it's not the best one. It's early because we're dealing with a monthly potentially bearish retest on the weekly time frame. So it would be completely in character for the market to close above here one week and then close below and nuke the next week. And while that would look like a trap on the weekly, if you look on the monthly, that would just be a perfect kind of wick type of retest. So if you're kind of front running time frames, you always need to be patient. But I think this market's been trading technically kind of very generously throughout this trend. So it looks like a breakdown and retest. 3800 is your resistance. If you want to de-risk some stuff there, I think it makes sense. If you get either, and this is a tall order, but a monthly close above 3800, which is in a long time, so understandably if you don't want to wait that long, that would be a decent kind of risk on or bounce signal. If you want to be aggressive with it, you could wait for a weekly close above monthly resistance, and then with the proviso that you should be open-minded towards bailing on that position quickly given your front-running time frames. If this 3800 reclaim kind of materializes, the area I would look towards as resistance is probably the midpoint of those two levels at around 4k. Nice round number as well. But in the absence of all of that, I think it's best that your base case is that this is a breakdown and retest. And if you're pleasantly surprised, I would still take it level to level towards 4k. And then if you're lucky, 4300. But this monthly time frame doesn't look terribly compelling. It just looks like a breakdown. And, you know, this level gave you a great bounce and now it's broken down. So you're expecting resistance there. And in terms of the next support, if this breakdown continues, you get downtrend continuation. For me, it's this cluster between 3500 and 3300, which you can see the lower half or the lower boundary also aligns with the pre-COVID kind of highs. That's kind of a nice little value area or significant high time frame structure to pay attention to. But in the interim, our pivot is 3800 for sure. So that's what you want to look at. The daily development is quite good, spiked below previous week's low on the open, previous day's low on the open and rallied. But I can't chase this because it's still a rally into resistance, still proven otherwise. So be wary of 3,800. That level on the monthly, but probably weekly and daily level will be your bias setter for sure. And one pattern to watch out for, given this early month rally into monthly resistance, is that if you get a really, early on in the month, like this week, a really strong overshoot, and then it starts to peter out and actually loses the level once again, that would probably be a very good sell, as that would suggest a monthly wick has been set, resistance has been reestablished, and that's probably worth selling down into a higher time frame structure. In any case, any trade idea on the S&P this month or in the coming weeks, I think is going to be premised on what the market decides to do around 3,800. Similar ideas for the Nasdaq. You can see that on a closing basis, although this is quite contentious, the market did break down and closed below this monthly cluster at 11.1. It's already pushed back within it in this kind of early sort of month rally. I think similar consideration here, right? The range we're dealing with is 12.1 to 11.1. I think it's reasonable to observe it on the weekly time frame. If you get a weekly close back within 11.1, I still think it's overall a trader's market. Range low, failed breakdown. What do? You swing it towards the range midpoint, if not the range high, and then you assume range bound conditions until proven otherwise. So if this weekly kind of closes like this, or ideally above 11.3, then 11.6 is your range midpoint to swing it to, with a decent likelihood of reaching towards 12.1. But at face value, it's worth being conservative, because I know we're talking a question of a few percentages here, but this is a breakdown of the monthly cluster, and so any rallies into 11.1 to 11.6 on a higher time frame should be treated as rallies into resistance. So again, not terribly keen on chasing this type of stuff. I think if you have a good weekly failed breakdown type of pattern, there may be a trade available like in a pure kind of range trading style, but that's still counter trend and still very much mercenary level to level type of stuff. I think that's all I've got. Hopefully that was somewhat instructive. We have new levels to work with, or at least kind of updated views on those levels. Bitcoin monthly, you know where to look. Just to quickly summarize all the points I've made. On BTC, your key range is basically 20k, 22k, 23k. The market's been creeping lower. The first evidence of strength would be a weekly close back above 20k. That would be a weekly range reclaim and also flipping the previous cycle's all-time high into support. That would start to look okay for the first time in a long time. For ETH, the market is playing ping pong between the 1.2k daily range high and the previous cycles level at 1400. You want to see it 1400 reclaimed to start looking constructive. Below 1200 starts to look garbage. In the meantime, you've got like a $200 range there to punt, which isn't the best thing in the world, but it is what it is. S&P monthly close broke down and lost support. I think 3800 is your next pivot. Whether it's outright resistance or an overshoot and then eventually resistance remains to be seen. The most bullish case would be a failed breakdown or a deviation at 3800, which results back in the market being reaccepted in that range. I think the earliest you could generate that signal is on the weekly, and on the monthly if you're being very patient. And same consideration goes for the Nasdaq, with that 11.1, 12.1 monthly cluster being your range. Technically speaking, it's an underside retest of resistance. If you wanted to be bullish and treat it as a failed breakdown, the earliest you could do so, I think, is on the weekly time frame, and even then you have to treat it as a short-term trade, taking it into the range midpoint 11.6 and the range high at 12.1. Enough rambling. I've probably bored you. Thank you for watching. Like, comment. I read all the comments. Love you guys. See you for the newsletter tomorrow, trletter.com. The commentary there will be much tighter and much more concise. Thank you for watching.